Everyone, welcome to today's Fundamentals. Hello, Peter.
Hello.
What's new in the markets?
Well, we definitely have the SVB crisis, which is a key issue. It was characteristic that the crisis practically shook the markets. We had also the implosion of Signature Bank, and there were other regional banks which also had similar problems. The issue with SVB started as practically the Fed's rate hiking path was quite aggressive. Market worries for a possible recession increased, hence demand for bonds tended to drop along with the prices.
Mm-hmm.
By the way, SVB had invested in US bonds, and exactly the drop of the value of US bonds forced the bank to write down losses, substantial losses. So then we had a bank run which practically led depositors to start withdrawing the money out of the bank, and overall that tended to cause the crisis. The big issue now is what's the way forward? On a fiscal level, we note that both Biden as well as US Treasury Secretary Yellen are signaling that the deposits, and the deposits alone, are at least partially guaranteed by the US state. So that's one reassurance. On the other hand, though, market worries are still high. And I would be noting here that we had a roller coaster effect since Thursday, where the bank was highly anticipated by the market to hike rates. And even some were speculating 50 basis points rate hike.
Mm-hmm.
That dropped to 25, and now it stands at marginally the bank remaining on hold. Mm-hmm. So it's a big issue. The market's expectations have shifted substantially. And I would be noting here that it's a question of time, in the sense, a race against time, in the sense that if Fed officials and government officials actually are able to ease market worries and more or less restore confidence, then we may see the damage being contained. Mm-hmm. If they're slow in actually boosting the market confidence once again, that could have ripple effects, and we may see more banks closing down. Mm-hmm. So it's a big issue, it's ongoing. There are some signs of stabilization, but the situation is quite uncertain for the time being. Other than that, across the Atlantic, I would be noting also the release of the UK employment data. For January, they were better than expected. Mm-hmm. It was characteristic that the unemployment rate ticked down. I would also note that we had an employment change figure which rose. Actually, it did not rose, it was above expectations. And overall, that tended to provide the idea that the UK employment market remains solid and could increase the possibility of another rate hike, if not a wider rate hike, in BOE's next meeting. That would be on Thursday next week.
Mm-hmm. And how about US stock markets?
US stock markets seem to be stabilizing, but they're very volatile for the time being. Mm-hmm. We expect that should market worries ease further, we may see an uptrend for US stock markets, while should market worries intensify, we may see US stock markets plunging once again.
Mm-hmm. And what about gold prices?
Gold prices jumped. They benefited from the weakness of the US dollar as well as the drop of US yields. But once again, the negative correlation between gold and the US dollar seems to remain present, and should the USD weaken even further, that could cause gold's price to jump even higher.
Mm-hmm. And what's in the calendar for today?
Well, we had already the European releases. I would be highlighting from the US, definitely the CPI rates for February. They're expected to slow down on a year-on-year level as well as on a month-on-month level. Uh-huh. And that would be on a year-on-year level, they're expected to slow down from 6.4% to 6%. Now, there is a double reading here in the sense that on the one hand, definitely the slowdown of inflationary pressures on a year-on-year level in the US economy may ease market worries about the Fed's aggressiveness. That's one. On the flip side though, 6% year-on-year, it's still pretty high. The big question here is, will inflation remain at the level which may stoke market worries that the Fed will maintain its aggressive hawkish stance or not? And we're talking that ahead of the Fed's interest rate decision on Wednesday the 22nd. So it's a big issue. On the other hand though, I would be highlighting also the possibility that inflationary pressures, okay, they're expected to slow down but may not reach as low as 6%. We have high costs in rents, fuel, okay, there may be a slight rise of oil prices, or if you prefer, gasoline and diesel, but overall I think energy costs will be calming down, so that's on the positive side. It's very, very interesting release, and I expect that there will be high market volatility, especially given the Fed's interest rate decision on Wednesday 1 and the current situation with SVB, which turns practically all the lights on the Fed and its intentions.
And how about the rest of the week?
I would be highlighting 3 releases. I would be highlighting during tomorrow's Asian session, we're getting from China the industrial output growth rate, that will be for February. It's expected to accelerate. Note that also the retail sales growth rate is expected to get out of the negatives and accelerate, and that would be a very positive sign on both levels. We would be having an increase both on a manufacturing and production level as well as on the demand level for the Chinese economy, which on the one hand would be implying that the manufacturing sector has restarted its engines quite well, while on the flip side it would also imply that the internal demand side of the Chinese economy remains robust and could provide some additional support for the manufacturing sector. I would be noting Australia's employment data. They are for Thursday during the Asian session. The employment change figure is expected to rise, the unemployment rate to tick down to 3.6%, more or less implying that the Australian employment market remains tight, and that could allow RBA to continue on its rate hiking path despite criticism on a political level. And I would also be noting on Thursday's late European session, we get ECB's interest rate decision. Now, it's a big issue on whether the bank will be hiking rates by 25 or 50 basis points or remaining on hold. There's a wide volatility in the market expectations here as well. Yet overall, I wouldn't be surprised to see, despite some easing of inflationary pressures in the Eurozone, the bank maintaining its hawkish stance, which could provide some support for the euro. Maybe though, and this is a point of interest, maybe though the bank will not be reiterating its previous forward guidance that it will continue hiking rates at 50 basis points. And that could turn a hike to a dovish hike and could weaken the euro. Also, I would be highlighting a little bit later, half an hour later, ECB President Lagarde's press conference. She's well known to turn market sentiment upside down after the release of the interest rate decision as such. So we may see volatility extending for euro pairs during the release and Lagarde's press conference later on. Finally, on Friday, I would be noting also the University of Michigan preliminary consumer confidence. It's for March. Should there be an improvement, that could provide some slight support for the US dollar.
Great.
There is also the retail sales of the US, which are expected to could slow down and could more or less weaken the US dollar.
Great. Thank you, Peter, for your time, and everyone for watching. Join us after a short break for technical analysis with Peter Iosif.
So welcome to the technical analysis part of the presentation for today. My name is Peter Iosif, Senior Market Analyst at IronFX. In front of your screens, you have the US dollar index. It's the 4-hour chart. All charts to be presented are to be of the same time frame unless otherwise stated. We are going to be doing a technical analysis for the USD index from scratch. This is the raw 4-hour chart we have. And I would make a start by actually switching to the weekly chart. Let's have a look at the big picture here. It's quite interesting. We make a start with the end of June 2021, where we had a strengthening of the USD. You can see that the same strengthening intensified practically around the end of the year. We had a wide upward movement, peaking practically somewhere here. But afterwards we have a wide downward motion, and that was practically, let's say, from the 25th of September 2022, last September, with the downward motion being interrupted. And that was around, let's have a look, the 12th of February, about 5 weeks ago, not even 4 weeks ago. So there seems to be a relative stabilization here. That's on the weekly chart. If we drill into the daily chart, okay, once again, note the downward motion which has started. Drilling even deeper to the 4-hour chart. And I think here we can actually start setting some levels. Note the touches. Here and here. So that would be a resistance line in red. And that would be the 103.75. Let's widen this a little bit. Okay, I'm going to be keeping my levels pretty near. So one touch, second touch, third touch seems to be pretty valid. The second resistance line, in my opinion, rests on this peak here. And I'm setting it on this peak because we have also the support here. With the third one being here. It's a beautiful upward movement which was halted practically at this level. Let's set the exact levels. The one would be 104.55 for the R2. And the R3 to be placed at 105.50. Let's have a look if that's okay. Could be a bit lower, maybe 45. Yep. Let's set also some support lines. One would be at this true, in my opinion. Pretty narrow, could go even lower. But I think that the reversal of the downward movement was characteristic, in my opinion. And that would be the 103.05 in green. There seems to be a slight resistance line here. I'm preferring this one. Let's go a little bit further back. Also worked here and here. Seems to be okay. Adjusting the chart. And this would be the 102.45. Final support line, going to be a little bit off. I think that's too wide. And there is definitely a mid-level here. Could also set it on this true here. I'm going to be breaking the movement to half. One level, see some touches here, then moved lower, a little bit lower. I'm keeping this one. Let's move a little bit to the back, see if there is any further reaffirmation of the level. Yep, here it is. Okay. Readjusting. And it's the 101.70. Let's set also the labels. First would be at 105.45. Set it even stronger, say 20. The second is to be placed at 104.55. $20. The first resistance line to be placed now at 103.75. First support line being placed at 103.05. Second support line being placed at 102.45. And the last support line being placed at 101.70. Now let's discuss direction here. Definitely we note that there was already a downward trend line. Yet note how that downward trend line intensified the slope and seems to have been broken. It's going to be interesting to see whether today's CPI rates are going to be pushing the US dollar index low or not. For the time being, we switch our bearish outlook in favor of a sideways motion, probably between the 103.05 support line, given that it has provided support here, and the 103.75 resistance line, which was aimed for here and tested here. So that should be a movement like this. But the RSI indicator below our 4 chart is pretty low, despite actually rising above the reading of 30. It's currently at 35, 36 almost. In my opinion, that tends to imply that the bears have not exactly left the market sentiment just yet. They're still present. And I wouldn't be surprised to see that sentiment, that bearish sentiment, being enhanced should also the CPI rates slow down, the US CPI rates for February slow down more than expected in today's American session. That could drive the US dollar index lower, definitely breaking the 103.05 support line and start aiming for the 102.45. Also, that would shift the downward trend line here. But for the time being, a little bit to the right. But for the time being, we tend to maintain a bias for a sideways motion, yet we also maintain a wait and see. So, sideways bias as a base scenario, yet we also issue a warning here about any possible bearish tendencies of the US dollar. Note that should the US CPI rates fail to meet the market expectations, or if you prefer, fail to slow down as low as the market expects, and should they indicate that inflationary pressures within the US economy are still high, that could push the USD substantially higher. And in that case, we may see the US dollar index rising, breaking the 103.75 resistance line, and aim, if not even reach, the 104.55 resistance level, a level which provided support here and resistance here. Let's have a look at gold's price. Big jump. It seems about to be interrupted. And that's an interesting question in the sense that we had a rise here and a rise here. There is a catch though. And the catch is that gold's price rose substantially, definitely. And that was since practically the 10th of the month, since Friday. Note though that it was continuous green candlesticks 1, 2, 3, 4. I will be counting this one as well. 5, 6, 7, 8, 9, without an interruption. It was continuous green upward movement with this correction lower during today's Asian session being the first one. So we may be talking about a mere correction here, which could be pushing gold's price even higher, especially should the USD weaken. And that would be shifting the upward trend line a little bit to the right. Note the RSI indicator, it has corrected lower, yet remains still above the reading of 70, implying a rather bullish sentimental market, yet at the same time, though, may imply that the precious metals is at overbought levels and may be correcting even lower. In such a case, we may see the price action dropping and breaking below the 1880. It's going to be a very, very interesting movement here. Time being, allow me to set the record straight. Let's have a look also at US stock markets. We still got a couple of minutes. A downward motion in the daily chart. Let's drill to the 4-hour chart. Which has broken the 32,500 and seems to be finding some stabilization at the S2 31,370, just above it. It's going to be interesting to see how the market will be reacting on the release of the of the US CPI rates for February. Should there be an acceleration of the US CPI rates, we definitely expect US stock markets to nosedive, in which case we may see the price action dropping, breaking the 31,370, aiming if not even breaching the 30,980. It's characteristic that we had similar movements on Friday. You can see that. Let's have a look also at NASDAQ. Similar movement, also the daily chart. Let's drill into the 4-hour chart. Also stabilization after hitting practically on the 11,845. Let's readjust the labels to avoid any confusion. For the time being, we expect the index to remain in a sideways motion given its relative stabilization here. On the other hand, though, should we see that US CPI rates have slowed down more than expected, adding more pressure on the Fed to actually ease on its aggressive rate hiking path, that could push US stock markets higher, and NASDAQ definitely one. It's going to be one of them. Maybe even breaking above the 12,220 and start aiming for the 12,540. That should be it. It's going to be a very interesting US, if you prefer, American session today. So be on your guards, keep your stop losses on, and just for the sake of it, have a solid trading day. Thank you.
Okay, all right. I see a couple of you guys streaming in. Natalia, Marky, Joffrey, nice to see you guys here, nice and early. Right. It's a fun session today. Guys. I want to encourage you to we have a chat panel over here, right? So we have a chat panel which you can try to use. Hey, good day to you too, Joffrey. Right. Yeah. So yeah, there's a chat panel, right? I'm not sure if you guys can see it. Right. So yeah, you can just send your messages, send your questions in there. Right. Just let me type to everyone. Yo, all right, yeah. You can send your messages there, right? That is the place where I can not only your messages but your questions, so that I can answer them along the way, right? Today will be a pretty exciting topic, right? It's on support and resistance, which forms the foundation of all of our trading strategies, right? Support and resistance, right? There are the right ways to do it, and there are the wrong ways to do it, right? So in today's session, we're going to show you some of the ways that I've used over the years, right, to trade very profitably, right, in combination with a couple of like other forms of analysis. But support and resistance by itself is always my main one. It's always my my go-to approach, right? So I need good support and resistance before I can even trade. Okay, nice to see you tune in, Edwin. Right, welcome to the webinar. Right, welcome to the webinar. Right, so yep. Once again, I want to encourage you guys. Anytime you got questions, just send it in. Send it right through. I'll do my best to answer them. Okay. Now let's begin today's session. Right. So as usual, right, this webinar is brought to you by IronFX. Right. Couple of things that you need to take note is this, of course, is the risk warning and the disclaimer that this webinar is purely educational in nature. So nothing in this webinar should be construed as investment or trading advice. Please do your own little due diligence before you guys trade, okay? Now, I think I can still see a couple of people streaming in, right? And yeah, let's begin. Let's begin, all right? So for those of you guys who are here for the first time, you might be wondering, who is this dude over here, right? Who is doing the webinar, right? So this is a younger version of myself. My name is Desmond Leong. I'm an external analyst over here at IronFX, right? So I also run the award-winning research firm Everest Fortune Group, right? So we are Best FX Research 2019, 2020, 2021, and finalists for Best Equity 2020 and 2021. Strong team of traders, strong team of prop traders, right? So if there's any word of encouragement I share with you guys is that I'm a young guy, right? I'm just barely 32 years old, right? And I trade full time, right? So I want to encourage you that, you know, you don't need to be 30 years in Bloomberg or 30 years in trading to be a good trader. You just need to learn the right stuff, right? Learn the right stuff, you can be a good trader, right? So that's what we are dedicated to bringing you here at IronFX. You know, we're going to bring you the highest grade education. I would dare even say institutional grade education, stuff that you don't find on Baby Pips, stuff that you don't find on Forex Factory, right? So my research firm, you know, we usually advise the banks, the brokers, the hedge funds on where the markets are heading, right? But we have this special partnership with IronFX to bring you guys the good stuff, or the stuff that will take care of trading really to the next level. Okay, so take this opportunity that anytime you guys have questions, just ask me right away. Just send it through. I literally have another screen that is open over here, watching for the questions. Okay, now let's move on from here. Okay, Tony, nice to see you tune in too. Nice and early, right? Our agenda for today, we're going to touch on a couple of key things, right? Swing highs, swing lows, right? How to do them correctly, right? Pullback, support, and resistance. If you have time, we try to look at trend lines. I'll be showing you some about the probability, how to improve the probability of your setups. Okay, I'll be showing you how to improve the probability of your setups after that. All right, now let's move on to the next one. When it comes to swing highs and swing lows, right? What you are looking for, right? What you're looking for is what I call significant swings. Okay, significant swings. So significant swings, when you're looking at a chart, right? Looking at a chart, you're looking for these levels which are very significant. Okay, because the more significant it is, the more effective it's going to be. Many times when people trade, right? They look at they see small little movements and they place too big of an emphasis on it. All right, they see small little movements and they place too big of an emphasis on it. What do I mean by that? Right, like this is what I mean. This is the wrong way, right? So you look at these small little movements and you place too much emphasis on the small little fluctuations, right? So this is an example of drawing support and resistance wrongly. Okay, this is an example of drawing support and resistance wrongly. You're placing too big an emphasis on the small, insignificant movements. And of course, I'll be touching this Fibonacci maybe in the next couple of webinars, right, where we're teaching you very advanced approaches to trading. But the important thing is that, right, when you draw swing highs and swing lows, what you're looking for is very significant levels. Like you can see, significant movements. Now, I do want to show you. I do want to take this opportunity to maybe show you some examples here. Okay. If you guys have happen to have a chart request you'd like me to take a look at, let me know. Maybe I can even analyze it live with you guys, right? But yeah, so let's just take a look at this. Okay. I was looking at a big call on Bitcoin, but let me show you what I mean by a significant level. If you're looking at Bitcoin over here, okay, what are the significant levels we're looking at, right? We're looking at this. Oh, sorry. This is a nice significant level. This is pretty significant. This is not so much. This is a tiny movement over here, right? You got a big movement over here. You got a big movement over here. Got a big movement over here. Maybe you can consider this as a nice movement, but you can consider this nice movement coming down. So these are the key levels that I usually take a look at right away. When you have established these levels, then you can start drawing. I like to put like nice horizontal lines over there. So I put a nice line over here, right? I put a nice line over here, put a nice line over here, put a nice line probably over here. So you start highlighting the key levels first. Okay, start highlighting the key levels. And what do we notice is that, for example, here, very nice support level where price is revisiting, right? I will explain the psychology of this thing. Is called a pullback support that we're looking at. There's a certain psychology to it, which I'll be explaining to you in a moment, right? Nice to see you here, Gulam, right? There's a certain psychology to see on what this thing is called a pullback support. Okay, now this first and foremost, you need to look for these kind of significant levels to call to draw a support and resistance. Okay, you notice that when you change the different time frames, it starts to look things get a little bit more granular, right? You can see this, right? You got this part over here, you got this part over here, this part over here, maybe this part, but okay, maybe not this part, right? But so these are the key levels that you're looking at. Look for significant levels. We are not going to place an emphasis on this movement here, this movement. These are not key levels, right? Look at this movement. It's not important. No one's going to look at these levels, and that's why it's not going to be that effective when you use them in trading. Nice to see you here, Benjamin. Right. So yeah, so this is the first thing that I want to let you know is that when you're trading, there we go. Look for the significant levels, okay? Look for the significant levels, okay? Ignore the insignificant ones, okay? There are a couple of, so when you find the significant levels, that is where there are the single swings they look at, right? So the thing about single swings is that they are not very strong, okay? So a single swing low over here, a single swing high over here, by themselves, they are not very strong. Okay, Natalia, maybe I'll take a look at gold in my next example, right? Yeah, that's significant. If it's just a single swing high or a single swing low, it is not going to be very strong. What you want to look out for, rather, is you want to look out for multiple swings, right? 1 swing, 2 swings, 3 swings, 4 swings. Man, that's a very nice level. Right, 4 of them lining up together, and what I like to do is I like to highlight it and becomes an area for you to look at. Can you see that? Right, I'm just going to erase it for you one more time. Right, how do I erase my drawings? Erase all in slide. Yes, there we go. Right, so it's always the case when you have 1 swing, you try to go further back and see how far back it can go, how far back it can go, how far back it can go. Don't worry if like you have the wick up here. You can see this is the wick up here. This is the wick up here. Don't worry if the price is not lining up at exactly at the same level. So sometimes people get too absorbed by looking at the exact level, right? The single price point, and they think that has, support and resistance is based on a single price. The truth is support and resistance work based on areas, right? So in this case, you notice that once I draw that, I will highlight this area, right? You notice I highlight a big area there, right? So I highlight that is the area of support. That is the area of resistance we're looking at. Okay. So now let's see if you can take a example, look maybe at gold. Or maybe if you want, I like to look at the futures, but you can look at XAU USD, and we can look at gold over here. Is there any multiple swing high or swing lows you can look at right away? Right? Yes. Oops, right, one thing here. Give me a second. Okay. So I was just looking at something here. So this is a big an example of a nice big level, nice big swing high, right? Because why is it nice? Because there's one big level over here and there's another big level over here. Two major levels that you can look at. So the next thing you're going to ask me is, okay, so where's the support, right? So okay, that's a nice, so this is what I call fairly nice bounce, right? I would consider it as one bounce, but because in this example it bounced off at exactly the same spot, and this was another nice big bounce over here. This bounce, I'm not too keen of it. It's kind of small. It's kind of small. I much prefer this bounce and this bounce over here, right? So a trick on identifying how significant a bounce is, how significant a swing high or swing low is actually to see how many bars to the left and how many bars to the right. You know, is it below off? So in this case, right, this is a major bounce, right? This case, right, the last time price revisited here, you know, you can see is from here and then it keeps going on, right? This one is all the way on. You can see how such a swing level usually has a lot of bars on the right and on the left, on the right and on the left. In this case, right, if you have a small little swing high, swing low here, yeah, sure, you know, on the right is great, but on the left, you know, it very quickly breaks down. You know, you can see it very quickly the levels get broken. So to tell whether a swing high or swing low is significant, usually you'll see how big, how much on the left and on the right is like clear space. All right. So in this case, right, for gold, we see that there's a really fairly nice support level over here, right? There's a nice support level. I'm going to put it in green, right? And that's the important thing that you need to take note of, right? So why price bounce off here was because, you know, people saw that, you know, it bounced up one, bounced up twice, it's coming down again, right? And that's why they are confident that you bounce up. The more levels that line up nicely in a horizontal level, the higher the chance that price is going to make, the stronger the support level, and hence the higher the chance is price is going to make a nice bounce. Okay, the higher the chance is price is going to make a nice bounce. So we have the support and resistance levels over here. Later I'll be showing you perhaps some of the trend lines I can look, because I don't want to dive too much into the different forms of analysis, but I can already see so-called a trend line here. You can see different kind of trend lines, potential breakout. This is a little bit more advanced form of analysis, right? So we could be seeing price come all the way down to here if it breaks this level over here. I will explain that to you later on how it works, because I do see overlap levels and pullback levels, which I will need to explain to you in this webinar before I touch on them. Otherwise, you'll be a little bit too confusing. Okay, now let's go back to this. All right, so multiple swings is effective. That is simple, right? In swing high, swing lows, multiple swings, easy stuff. Okay, what I do want to let you know is one of the strongest form of support and resistance is called the pullback. Okay, one of the strongest form of support and resistance is called the pullback. What is the pullback? Okay, this is the pullback. Let me explain to you the psychology of a pullback. Okay, psychology of a pullback. You know, you got price. Okay, imagine price touch this level, it dropped once. Touch this level, it drops the second time. Touch this level, it drops the third time, right? And now price is over here. When price is over here, a lot of people are thinking that it will drop again, right? Because it makes sense. Price failed to break up once, failed to break up twice, failed to break up 3 times. Now it's back there, they're expecting it to drop down. The problem is that if price suddenly breaks up over here, it starts to go up. As you can see, you know, there was a breakout. Okay, there's a breakout. Price is going up. And those people, everyone who was short over here, meaning they were selling, everyone that was selling over here, they suddenly get taken for a ride, right? They get taken for a ride. It goes up, it goes up, it goes up, right? They start questioning the meaning of their life. They're like, oh man, I should have used a tighter stop loss, right? It's a terrible time now. I'm suffering so much losses. It goes up, it goes up. They start cursing their luck. They start thinking that swear that they'll never trade again until it reaches here. Then it starts reverse, right? So now there is some light at the end of the tunnel, right? They are still holding on to their short position over here, right? This is their short position, meaning that this is the selling position that they had previously. It starts going down, it starts going down, it starts going down, it starts going down, right? And all the while they're holding on to their trades, right? They are seeing light at the end of the tunnel. And when it reaches here, the initial level where price broke out from, what do you think they are going to do? What do you think most people are going to do? Are they going to hold on to their position, or are they going to close off their position? Okay, Kramer, I see that you have a question. I switched to line graph instead. Can I say yes, looking at line graphs might work pretty well too, Kramer. We look at it in a bit, right? So when the teller say close the position, and that is exactly correct. You would close the position, right? You would close the position, right? And you get out of this trade. You close this position and you get out of this trade. So when you close a position, a short trade, to close a short trade, you need to buy, right? You need to buy an equivalent position to close a short trade. So everyone who was short over here will start to buy, and that usually causes the initial bit of momentum to come in to cause the price to bounce up. That is why it's called the pullback support over here. Okay, it's one of my favorite, right? One of my favorite styles of trading. The pullback support is so effective, right? Once it comes back down to here, right? Price, everyone who has been freaking out since they've been short over here, they've been taken for a while, right? When it comes back to here, they finally close off their positions, and it gives that injection, right? It gives an injection of buy orders that come in fast and quick, that pushes price all the way up, right? And that is what I mean by the pullback support. Price is, where's my mouse, right? Price is essentially pulling back, right? It's pulling back to the support level. That's why it's called a pullback. And support, of course, means that it's below price. Now, people always get confused between the difference between support and resistance. Always remember, if you're a human being, right? Or what do I mean if you are a human being? Everyone here is a human being, right? You are standing on support. The floor is supporting your weight. The chair that you're sitting on is supporting your weight. You are, for something to support you, it needs to be, below you, right? You are supporting someone, you're holding the person, you're supporting them, right? So no one ever says that the floor is resisting my weight, right? If you think about it, it's very weird. The floor is supporting my weight, the chair is supporting my weight. So remember, support is always below you. Do not confuse this terminology, okay? The floor is supporting you. The resistance is when you push against something. Resistance is usually above you. The ceiling, you're pushing against the ceiling. You not say that, oh, the ceiling is supporting me. It sounds a bit funny when you say it that way, right? The ceiling is supporting me, right? But you're pushing against the ceiling. You're saying the ceiling, is resisting me. This thing is resisting me. You're pushing against something is resisting, right? So resistance is always above price, okay? Support is always below price. Important considerations that you need to take, okay? So the opposite is true when it comes to pullback resistance, right? Pullback resistance, you can see how price bounced once, price bounced twice, price bounced 3 times, right? It doesn't need to be 3 times. Usually once is good enough. One good swing low is good enough. I'll be showing you what I mean by that later. One good swing low is good enough, right? When price breaks it, right, there's a whole bunch of people who thought that it was going up, right? There's a whole bunch of people that thought that it was going up. Now it's dropping. They are being taken on one hell of a ride, right? They're like, oh, shucks, man. Price is dropping, it's terrible. Man, I should never have held on to the position. I should have closed it out. I should have used a stop loss, right? They start questioning the meaning of life, right? It goes low, and then it starts to turn around, When it starts to turn around and it starts coming back up to here, once again, once it reaches the entry, the level where it broke out from over here, as you can see, once it reaches the level where it broke out from, that is where they, who were holding onto their buy positions, remember initially they were holding onto buy positions, they would be closing off their trades. To close off their trades, they would need to sell, right? Need to sell. When you sell, that's where price comes down, right? You have that nice bit of momentum, injection of selling orders that helps you push price lower. Okay. Now, this is an example of how it looks like, right? So we got a swing low. You can see a very nice significant level here, right? We highlight this as a main resistance level. Okay. I mean, you could line it up with Fibonacci. This is slightly more advanced where you can line it up with different stuff, right? And of course, let's just see. This is a second Fibonacci level. You can line it up. I will explain this later. This is how you can fine tune and give yourself very, very high probability setups. Let me see if this actually fast forwards into an example. You can see how price reaches this level, touches it, drops down. Okay, that is what you're looking for. Okay, sure. In this example, I show, right, just in this example, what I'm showing is that I show this resistance level over here. Over time, I'm going to show you how you can combine maybe a trend line channel. I'm going to show you how you can combine an Ichimoku cloud on top. I'm going to show you how to combine Fibonacci. I'm going to show you how to combine Fibonacci projections, right? I'm going to show you how to combine Fibonacci expansions, extensions, correlation, throw in a whole bunch of stuff, and you improve your chances of being profitable, right? That is that. If you ask me, right, a lot of people ask me, is there a single best indicator? Is there a single best strategy that works very well? There isn't. In fact, it's what we call the confluence. You're looking for confluence over here. C-O-N. Confluence also means combination, right? Well, my handwriting skills is terrible. I'm sorry. Right? You're looking for a combination of indicators to all agree that price is going in a certain direction. In this case, you know, I got the resistance, you know, I got the 61.8, I got 38.2, I got all the Fibonacci, all telling me that price is working out very nicely. Price might reverse from there. And that is how I know that I have a high probability trading setup. We'll learn more of that over time in the VIP room. Yes, for those of you guys who are here, I will share with you how you can get into the VIP room, the IronFX VIP room, which we are launching. It's pretty fun. It's a pretty nice place to be. You will get direct access to me and the pool, and my pool of prop traders. Very nice because you get to ask some really nice questions. You can practice your technical analysis there, and I can teach you. I can show you whether you're doing it right or doing it wrong. Okay. Now the next thing I want to show you, right? Next thing I want to show you is overlap support and overlap resistance. Okay. Bam. We are now here. Oh wait. Let me see if I can show you. I'll show you an example of a pullback working very nicely. Okay. Let me see if I can show you an example of a pullback working nicely. Maybe let's toggle around a bit. Okay, let's go daily analysis. Okay, perfect example. Guys, perfect example over here. Now, Marky, your question that you can put there. Yes, closing, if you do line chart, it works well too. Right, this is the pullback that I was looking for. You look at candlestick, it works equally well. Right now, guys, let me show you what I mean by this pullback. Okay, we can agree, right? We can both agree that we have a very, very nice little bounce over here. This is a pretty significant bounce, right? It's a pretty significant bounce. Now we got price that's coming down here, price that's coming down to here. When it reaches down to here, what do you expect is going to happen? Price might bounce up from here, right? Everyone is thinking, yeah, you know, last time price went down there, it bounced up pretty strongly. You know, it's probably going to happen again. Okay, so we have price going down, down, down. It's down there. What happens? Holy smokes, it breaks. Okay, it breaks. People who are long, they start panicking. Right, they start panicking, and now you can see price going down. What is happening to the people who got into a long position over here? What is happening to the people who got into a long position over here? They are freaking out, right? They are freaking out. They are thinking that, oh man, I thought the bounce was going to happen, right? I mean, everything pointed, that the signs were all saying that price was going to bounce here. But the moment this happened, price came down to here. They're holding on to their long positions, right? So remember, they're holding on to their long positions now. And of course, they are freaking out. What we do as good traders is that when people panic, we stay calm. Okay, people panic, we stay calm. What happens after that? Okay, what happens after that? Just let me erase my drawings a bit. Whoa, I draw a lot on this chart. What happens after that is that price, then you can see, okay, nice, one strong bar that spikes up to here. Now, what do you think people are going to do in this circumstance? The moment they see this, people are freaking out and they're getting out of their position, right? Bam, you can see almost in the next bar. Can you see that? In the next bar, this is how intense the selling can be sometimes. In the next bar, everyone who was long over here, they just freaked out and they sold and they got rid of everything. Maybe I can show you on the 4-hour chart. It might look slightly easier, right? So I'm going to go back to here. Right, remember this is a, this is a nice swing low support, as you can see over here. The moment price breaks out, bam, bam, down, 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 it goes up, comes back up to here, right? Everyone who was short, who was long, thinking that price might bounce from here, they get out of their trade, right? They get out of their trade, and it causes prices to just plummet once again. Okay, plummet once again. How strong is such a pullback? Usually, look at this, right? It goes down, it gets, people get off the trade, and this is where you make the money. This is where you make the money. When people are panic selling over here, you start to short and you start to make some money. Okay, you start to short and you start to make some money. All right, if you guys got questions on this approach, please send it through so I know I can answer them. Yeah, but this you will see this happen a lot in varying degrees. Okay, let me show you another shorter term example. Just this move over here, right? Just this move over here, this level over here. Replay. I'm going to show it up. Sorry, replay feature over here. Can see that price, bounce up nicely. It's a pretty significant bounce. Price is now breaking it. Right, breaking down, 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 down. Man, the people who are long over here are being taken for one hell of a ride, right? Being taken for one hell of a ride. Now, then what happens when price? Look at it. Can you see that? It shoots up one touch, right? And it usually drops very strong. There's even another spike up here. Right, and people are still freaking out. These were for the slightly later comers, the second spike. But I can see how people freak out and people close the trade pretty fast. The important thing, right, is identifying this nice swing. The more you can identify this, the more accurate you can identify this swing, the more accurate your reversals can be, your pullback resistance and pullback support can be. Okay, it's pretty fun, right? Honestly, it's pretty fun. It's a really, really great way to trade. In this example, other things that I would have considered, right? I would have considered maybe a trend line breakout, right? Breakout pullback. I might have considered a Fibonacci retracement. Notice how price react off the 38% Fibonacci retracement perfectly. Many different ways that you can really improve your technical analysis, right? Your style of trading, your probability of your trades being correct. And that is where, what I'm teaching you today is only theory, right? The value comes when you practice it, guys. Always be practicing. How do you, I'm just going to interrupt this session right here to send you to a particular link. The link is vip.ironfx.com. This is the link that you want to go to, right? It's the IronFX VIP trading room run by me, run by my fellow prop traders. it's as long as you have an IronFX account, you will get access to this room, right? As long as you have an IronFX account, you get access to this room. And let me show you the beautiful thing here, right? So for example, Natalia, right? You might be looking, right, at gold. If you have a question on gold, you can come in here and you can speak to me directly, right? Maybe this is a 5-minute chart. Let's just say you're on the 1 hour chart, right? You're on the 1 hour chart and you see this like overlap resistance over here. Let me see. Actually, you see this overlap resistance that comes all the way back to here. You can come in here and you can go, hey Desmond, right? What do you think of this resistance? What resistance am I referring to? I just need to highlight the text that I just drew. I can click this little button called link object to text. Click on it. I can just click the object that I just drew, right? I can click on this one over here. You notice that it lights up. And I click confirm. So when you send the message through, right, how it looks like, right? So I'm looking at a message like, oh, wow, someone has just mentioned me over here. Hey, Desmond, what do you think of this resistance? What resistance are you referring to? I can hover my mouse over it and you can see it lights up exactly on the chart. So this is where you can practice your analysis. You can ask me questions very clearly. I can jump in over here. I say, okay, so this is the resistance level that you're looking at. Well, it happens maybe. It's not a 30%, say. I might wait for the 38% retracement, right? So same thing, I can highlight 38% retracement and link it. I know it's a little bit hard to see, but I can link it there. And you're like, oh, what is Desmond referring to? What 38% retracement? You hover your mouse over it, it's like, oh, he's referring to this Fibonacci retracement, right? So this is a great place for you to practice your analysis. We have Forex, we got commodities, we got indices, we'll be adding in crypto, right? All the different kind of charts will be here. And anytime you have a question, just go in, ping me, and practice your trading. Okay, you might be looking at this and you're like, hey Desmond, is this a double bottom? Right? What's a double bottom looking at? Is this like is this a double bottom kind of formation that we're looking at? Same thing, highlight, link object to text, just select whatever you just drew and you send it through, right? Because when I look at it, I'm like, what is the double bottom you're referring to? Hover my mouse over it. Oh yeah, it kind of looks like a double bottom. Then I can, we can guide you, say, yep, it looks like a double bottom. Price might bounce up to this level over here. You can take your profit there. If you do this well, you can be this is what IronFX has done to get the VIP room here. It's not easy, right? The very fact that you can get, I believe it's a limited time promotion that just being able to have as long as you have an IronFX account, you will get access to here, right? That is something that I don't think the promotion will last for a long time, right? What you need to know is that when you are in the IronFX room, I'm going to show you, right? Some people might be a little bit confused because when you come into here, right? I'm just going to show you, you will be in this thing called a preview mode, okay? In the preview mode, you just need to click on join IronFX server, register. I'm going to show you really quickly. Let me see if I can just register something really quick over here for the tree. I think we have enabled registration. You need to agree to the disclaimers, right? You join the server. Now, when you join, you notice that there are no channels on the site. What you need to do is to click on this thing called request access, all right? This key thing over here. Click on request access. Please attach proof of your IronFX live account to get access. You just need to click request to join channel, right? Let me in, right? Maybe you just need to say message, let me in. You attach a screenshot of your account. Let's just say I'm going to attach a screenshot of, let me just attach a screenshot, a random screenshot. But maybe, of course, the screenshot of your IronFX account. You send in the request, right? Then we tell you that your request is pending approval. I will come in here. I will see your request. All right, we got Desmond requesting, okay? He has attached the relevant proof. Accept him. And I'll give you like a gold here. and it's done. And when that is done, how it looks like is that you will then have access to all the different channels. Very simple, right? And we have some little congratulations. We teach you a little bit of stuff on how to link stuff over here. And there we go, right? It's a really easy way, right? It's a really easy way to get you to get in, all right? Now, I don't want to deviate too much from our original explanations, but my one bit of advice, if I can, is that, this is a very limited time promotion that IronFX is running. If you have an account, if you don't have an account, go register for one, right? But if you have one, just come in here, request access to join, and lock in your position, because I think sooner or later they might be increasing the requirement just to get access to it. So once you lock in your position, lock in your entry into this VIP room, right? That'll be great. Okay, now let's go back. One thing I want to teach you guys, next thing is the overlap. So previously we were talking about pullback. Now we're going to talk about overlap. Okay, what exactly is overlap? Now, what exactly is overlap? Overlap is what happens when price bounces from a pullback. So remember, we have a nice big resistance over here, right? Price breaks out. When it finally pulls back, it pulls back here. When the pullback bounces, it becomes an overlap. Okay, when the pullback bounces over here, it becomes an overlap. Got it? So that means price has respected one time from the bottom and one time from the top. Overlaps are really good because you see in this example, we got a nice reaction here. We got a nice reaction here. This is then an overlap, right? These overlaps are very useful because whenever price reaches it again, it usually, right? It usually reverses, right? As you can see, it usually reverses over here. Bam, it goes down nicely. Okay, overlaps are a great way to trade. It's one of my favorite ways to trade. And I'll be showing you, we'll be practicing a little bit together to see how we can identify overlaps. Okay, then we come in over here, we go into the charts. One thing which I wanted to show you guys is actually on gold, right? So I think it was XAU USD. Natalia was asking, right? Let's see it over here. Overlap. An overlap level that you can look at. In this example, there's this overlap that you can look at. Okay, you will notice how price reacted very nicely. Oh, sorry. Reacted very nicely one time from here. And then it bounced very nicely one time from here. And then, you can see that when price went through, it touched, it go down, it went up, it go down, it went up, it go down, it went up, it go down, right? Because it's an overlap resistance. Overlap levels are very good, but only if you know how to identify them properly. Okay, overlap levels are amazing, but yeah, the important thing is that you need to be able to identify them properly. Okay. So Natalia's asking, right? Just in terms of analyzing gold, what do we expect on gold? Okay, what do we expect on gold? Right? Let me see. I like to put rate as resistance, so I'm going to put this as a resistance area. This is as a support level. A little bit of a trend line breakout over here. Could it be a bit of a channel? Maybe we got a little bit of a channel over here. Descending channel. Yep, we got something like a descending channel over here. Okay, what is the Ichimoku telling us? Ichimoku is telling us that we got a little bit of bearish pressure pushing prices down. My bias, right? My bias is that this is the key level that needs to be broken. This is the key level that needs to be broken. If prices breaks this level, right, I will trigger a sell entry. Maybe I will consider a sell entry to push prices maybe all the way down to here, to the next key support level. But this level needs to be broken first to trigger the move down. Of course, guys, remember, this is not trading advice, right? This is not trading recommendation, but my analysis on this is that what you definitely need this level to be broken first. With the bearish channel that is pushing prices down, with the bearish Ichimoku cloud that is pushing prices down, right? You should be able to have prices being pushed all the way down to the 1678 level. But only if prices close below the 1788 level. Okay, guys, we'll be taking some time to go through some analysis, some examples, right? If there are particular instruments you want me to look at, let me know, right? So whether it's gold, whether it's oil, whether it's silver, euro dollar, right? Let me know if there are any particular charts that you want me to look at. I'm just going to take this chance to show you a couple of instruments, right? And maybe I can to show you how overlap support, overlap resistance works. Okay. You can see over here that this is a very nice pullback turn overlap. Okay. Now let me show you the replay. Look at this. Price bounce off once, bounce off twice. Very nice. What do we say when this happens? When this happens, people are thinking that prices is going up, right? People are thinking that it's going up. Right, just give me a second. Yeah, people think that it's going up. All right. Now, when prices break and it starts to go down, yeah, that's where people start freaking out a bit. Right? People start freaking out. It goes down, but it comes back up. Okay, amazing. It's back up. And what happens? This is then what we call a pullback resistance. Right? Remember, once prices break out from here and it comes back up to here, this is what we call a pullback resistance. We expect prices to go down from there, right? What happens? Yeah, it comes back up. Yeah, bam, it goes down, it goes down, it goes down. Okay, so this is the pullback resistance that we're looking at. Now that this resistance happened, it is now called an overlap, right? It's now called overlap resistance. Key level to look out for, right? I mean, we go on and we go on and we go on. So I have no idea when it comes back to retest it again. Right, I think it might be retesting it soon. Whoa, it's a long time. I need to click on it so much. Okay, it's coming back up to retest it. Let's see. Yeah, I think it retested it this area over here because of this spike, right? So it retested this area. It goes down again. This is the overlap resistance that you can see in action over here, right? Very nice move. Okay, let me just cancel the bar replay. You can see this was the overlap, and then it comes back up to here again. Same thing, overlap resistance we're looking at, right? Touch it and then reverse. Very, very effective. Okay, this kind of setups are very, very effective, right? And I want you to train your eye to be able to see it, right? I want you to train your eye to be able to see it. Because first and foremost, when it comes to trading, support and resistance, right, it stands almost as one of the strongest things that you can use, right? In our next session, I'll be teaching you trend lines. I'll be teaching you channels. I'll be teaching you how you can improve the probability of your setups being correct. Okay, you can improve the probability of your setups being correct. Let me see if I have an example where I can show you what it means by improving the probability of your setups. Okay, let's just say we have a resistance level over here, right? This is what I'm going to teach you guys next. Let's say I have a resistance level over here, right? This is the overlap resistance that we have identified. Usually in my trading, now guys, trading is not binary. Trading is not 0, 1, meaning 0 means you don't take a trade, 1 means you take a trade. This is not what trading is like. Trading is 0, 1, or 2, or 3, or 4, or 5, right? So do I risk, how much should I risk on a trade? Well, it's not 1 to 5%, but is, do I have 1? Are there 2 check boxes, 3 check boxes, 4 check boxes, 5 check boxes? How many check boxes are there to suggest that it's a good trade? Okay, the more check boxes, so maybe if I have 5 check boxes or 4 check boxes, I might risk like 2% of my trade, right? If I have 2 check boxes, maybe I risk 1% of my trade, right? So it's about finding how nice a setup it is. Okay, if I have 1 checkbox, maybe I risk 0% on my trade. Okay, so just remember we have a checkbox system over here. Okay, let me just erase everything, draw this thing over here. Let me show you what it means to be like, let me just see, resistance area over here. We got, we got a resistance area over here. Okay, now let's have different checkboxes by the side over here. Okay, let's see how nice this setup might have been. Okay, we got one checkbox, right? We got two checkboxes, we got three checkboxes, and I'll explain to you what they mean later. Okay, overlap resistance is one checkbox. I call it overlap, right? Excuse my terrible writing. We got overlap resistance. Next thing, I draw a Fibonacci retracement. Maybe I do a 1273. 127%. I know you can't really see it, but 127% is another is a Fibonacci level. I have another checkbox over here. I'll do another Fibonacci retracement all the way from the top all the way down, right? I pull up the template. Maybe I have a 61.8% that is slightly higher. Not that effective, but it's fine. I have a, there we go. I know you can't really see it. I'm going to erase this, but there is a negative 27% that is over here. So we got negative 27. That's great. 3 checkboxes. And the last one, maybe you take a Fibonacci. I know I'm using a lot of Fibonacci here. I'll teach you guys how to use it in a bit, right? And I noticed that the 100% projection is over there. So I got the 100% projection. I got 4 of it. 4 of it, if I got 4 ticks, maybe I'm risking 2% of my entire account on this trade. Okay, we see prices go up, 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 up. So we got the whole area over here as a confluence area, right? It comes up, it touches it, right? And then it goes all the way down. So that is how you get into a high probability trade. You don't just trade one thing by itself, right? You don't just trade one thing that is by itself. I believe you might have been able to use a trend line. Trend line wouldn't have touched it, it's fine, right? But you can see that when it comes to trading, you need to see what is the good levels that you're seeing over here. The more, the better. Okay, the more, the better. And I'll be showing you how to, today I've shown you how to use the overlap and the pullback. Over time, I'll be showing you the Fibonacci extensions, the Fibonacci retracements, the Fibonacci projections, where I'll be showing you how to use the trend lines. I'll be showing you how to use channels. I'll be showing you how to use Ichimoku. Right? I'll be showing you how to use indicators like the stochastic, maybe look for divergence over here, right? I'll be showing you a lot of things on how to be a better trader over time, right? It's actually pretty exciting because when you know how to do this right, you, like I say, guys, it's a matter of even financial freedom, right? If you know how to trade profitably, you are literally printing money out of thin air. Okay, literally printing money out of thin air.
Hello everyone and welcome to another educational video. In this video we look at the 3 main US stock market indexes. The S&P 500, Dow Jones Industrial Average and Nasdaq Composite are the 3 most widely followed indexes in the US. The S&P 500 is an index with 500 of the top companies in the US. This index represents approximately 80% of the total value of the US stock market. Generally, the S&P 500 index gives a good indication of movement of the overall US market. The S&P 500 index is a market-weighted index, so basically every stock in the index is represented in proportion to its total market capitalization. This means that if the total market value of the 500 companies in the S&P 500 falls by 10%, the value of the index also falls by 10%. The Dow Jones Industrial Average is one of the most well-known and most frequently used indexes in the world. It includes the stocks of 30 of the largest and most important companies in the United States. The DGIA is a price-weighted index and represents about a quarter of the value of the entire US stock market. In general, the Dow is known for its listing of the best blue-chip companies. The Nasdaq Composite Index is a market capitalization weighted index of all the stocks traded on the Nasdaq Stock Exchange. The technology sector accounts for just over half the index, more than 3 times the index weight of any other market sector. In addition to these 3 indexes, there are about another 5,000 that make up the US equity market. Hope you found our video interesting.